Hello and welcome to tonight's webinar, or depending on where you are around the world, it could be the morning, it could be even the afternoon. So thank you very much for attending. My name is Brian Kahn, and you can see my consulting company there, Jupiter Peak Financial. You have my email there, and then you have the website there where I post almost every day on the IBFX Daily Forex Trading Edge.com page, where myself and some other contributors go ahead and post daily analysis, so take advantage of that. We have a huge amount of response to this tool. We have a large amount of people on the webinar this evening, so thank you very much for attending. I usually try and stick to about 25 to 30 minutes to my webinars. There's about 22 different webinars that I've done for IBFX on their YouTube page, and I'll show that link later. But due to the large amount of people on tonight, we'll probably go a little bit longer. I encourage you to use the questions function, and there have already been a large amount of questions that have come in, so I'm going to try and tackle some of those right away. But I just wanted to leave this page up so that you all know if you're in the right place and you're in the right webinar, and that you have the information to contact me and also to see some other content that I do post. So let's go ahead and go to the next page. This is very important, so I'm going to leave this up just for a few seconds for you to peruse. And again, the disclaimer really should hit home. We're talking about new tools tonight. We might be talking about some new pairs that some of you may have not looked at before. Just because I bring up a pair does not constitute a buy, hold, or sell recommendation or anything like that. This is all for educational purposes only. Please keep that in mind. So the outline, just so you know where we're going tonight, we're going to talk quickly about fundamental analysis, just to give a quick catch-up since we were together a few weeks ago. Go into technical analysis, looking at some major trend support and resistance and live market examples. We're actually going to do that kind of on the other half of looking at this volatility tool. Since we're looking at volatility using the Interbank FX MetaTrader 4 platform, we'll kind of talk about volatility, some of these pairs, and some of the technical analysis all at once. But we'll definitely talk about exotic pairs, getting you to think about some other opportunities out there. But again, what do they mean for you as an individual? A lot of you guys have been with me before on webinars. You know that I really stress how important it is for you to understand and do your own due diligence if trading opportunities on an exotic pair make sense for you. If they don't, that's fine. So you may be able to tune out some of this webinar because it doesn't matter to you. You might be able to pick up some other information on the technical part. But remember, each and every one of you are an individual entity. We're speaking on a macro level tonight. There is no specific education that's going out to you as an individual to say, oh, Brian was talking to me, I need to go do this. This is all for broad educational purposes only. We'll talk about your opportunity, a little bit about what I do with my consulting firm, and then we'll do a review. So before we get into fundamental analysis, I just want to lead through, like I said, there's a large amount of people, so bear with me. I'm just going to go back to this panel here, and I'm going to get through a few of these questions and knock them out because I have a feeling a lot more are going to come through as we start to get into the information for tonight, the main content. So someone already asked, there are thousands of Forex indicators and tools such as MACDs, RSIs, Fibonacci's, things like that. What are the best key indicators you suggest that I should use for successful Forex trading? We're going to talk about that later. Obviously, there's no way that I can go and answer that question for you because I don't know who you are. And for me to just say what works for me may not work for you. So we'll talk about that later. So whoever asked that question, hopefully you'll learn some new information tonight, but I'll be able to tackle a little bit about that question later as we get through the slides. Does this indicator work only on IBFX? Remember, you guys, IBFX did develop it, so I imagine it would, but it only works there. But remember, I'm consulting and I develop education alongside IBFX, so if you have any questions at all, please take advantage of the great customer service at IBFX and give them a call. Let's see, let me just scroll through, so again, bear me because there's a lot. Some people have mentioned about the indicator not working on two different platforms with demo accounts and things like that. Again, same thing, call the customer service desk and talk about it, and I'm sure they'll be able to work through that and give you some suggestions. Let's see. Yeah, again, some people are talking about just the volatility tool as a whole. We'll go through it tonight, but again, if you have any specific problems with it loading up or anything like that, please just go ahead and call customer service. So we're going to lead into this. So someone's segueing into where we're going. Do you think volatility has decreased? Volatility in average daily trading ranges have gone down the past year. Do you think it will increase before or after we get a new president? We're going to talk a little bit about that tonight, but very, very good for being aware of that volatility. That's something we will talk about. Someone's talking about candlestick charts. We're not going to get into candlestick charts too much tonight. We're going to stick on volatility, but I think volatility is very, very important for you guys as traders. And again, I'll talk about that as we get into that. Can you talk about alligator? I'm not sure what you're meaning by alligator, if that's a specific indicator or not. Where can you get info just about the volatility indicator? I'm going to show you guys that as we get through. And again, these are recorded, so continue to ask questions. I'll try and slide through them. Again, we have a huge, huge amount of people on tonight, so we'll take our time going through. I'll show where you can get it. You can call IBFX, tonight, tomorrow, and you can get it right away. The Williams alligator, that's not, someone's asking about Williams alligator, so no, we're not going to be talking about that tonight because that's not on the agenda for tonight, but if you go ahead and give suggestions at the end of this, we may be able to do something on that down the road, so your suggestions, your feedback are very important. But if you have any questions, like I said, on the volatility indicator after this, just go ahead and call IBFX customer service and start to make sure that you get it on your website, but I'll show you, or on the platform, and I'll show you that. So let's just discuss the current events and what's going on right now for traders and investors. And before I do that, let me just explain a little bit about me. I like to trade forex on a daily basis. I also use forex as a hedge, and when I say hedge, I have to clarify that there are intermarket relationships at work. Equity markets move, and sometimes there are relationships out there that when equity markets move a certain way, the U.S. dollar moves a certain way. And so I like to use not only Forex for day trading opportunities due to the leverage that it provides, but I also like to use it to hedge equity portfolios and things like that if I see relationships out there. So I'm a long-term trader in foreign currencies, and I'm also a short-term scalper swing trader in foreign currencies. I also hold equity portfolios, and I need to reduce the risk sometimes when I see that fit if the markets, I think, are going sideways or down and doing certain option strategies and things like that. So I combine foreign currencies with options and equities and look at the markets on a broad scale. So that's me, and that's why when I'm talking about the markets, I won't just talk about Forex. I'll talk about the markets as a whole and relationships and maybe some intermarket relationships, as I call them, between various markets. So current events, right now, what I'm seeing is I'm seeing our economic calendar weaken a little bit as far as the data that's coming out. And there's a way to track that. And I put that link right here, forexfactory.com, that you can get right through the IBFX website. So your broker is providing great information, whether it's webinars, whether it's daily analysis that I'm providing, and Raggy Horner and other contributors, the IBFX Connect, the social trading site, we're providing great information for you. So use your broker to stay on top of fundamental analysis. Use the economic calendar, which I'm going to show in just a moment. Use a TV station, CNBC is on around the world. You have Bloomberg, and then you have your other various market sites. So let me just slowly flip over to Forex Factory just so you can see some of that economic data. If you're not paying attention to it, I really, really think that you should be paying attention to the broad scale economic data. So this is Forex Factory. Again, you can link right to it from IBFX. We got some data today, and we've been getting data over the past few weeks and months that haven't been great in the United States economy. Obviously, I don't even have to mention Europe. We know what's going on over there. But the equity markets are hanging in there. Even though some poor economic data has been coming out, even though Europe is a big unknown and we have elections in Greece this week, economic data has been kind of coming in soft and underperforming, but the equity markets have been kind of hanging in there. And so why is that happening? Well, we know that there's government intervention. We know there's quantitative easing in America. We know that there's austerity measures over in Europe. So these markets are more volatile than the volatility really is out there, because any time any moment something can happen. If you're trading undisciplined without a trading plan, or you're over trading your account, and then all of a sudden a government says we're going to do some quantitative easing or this austerity measure or bail out this country, you obviously know that you can have a big winner or a big loser, but you don't want to leave it to chance. And these markets are a little bit more volatile than what the volatility is telling us. So just keep that in mind as we go through tonight. So yes, overall, volatility has come down as of late because the equity markets have done pretty well, not over the past month or so, but over the past year or so, they've hung in there pretty well. And so when the equity markets go up, volatility goes down. I'm going to show you that in just a moment. So keep that relationship in mind. So yes, average daily trading ranges and volatility have come down, but we still have the rumors and the surprises could happen at any time. So make sure that you're paying attention to the overall fundamental news here on forexfactory.com or however you choose to do it. Going into volatility, just to show you what volatility is, because it's a great way to segue into technical analysis and into tonight's main topic. What are the traders doing with the fundamental news? Major trends, support and resistance, and then live market examples and intermarket relationships. This whole slide is now going to take place where we're going to actually see this information will take place after I introduce the volatility tool. So IBFX's volatility tool, I'm going to leave this screen up because I'm going to come back to it. I just want to jump over to a chart that I have on TradeStation and show you, I'm sorry, not on TradeStation, just I'm just going to pull up a calendar here, a chart here. This is the volatility chart, the volatility gauge. You can see it's a volatility gauge of the S&P 500, a broad market in the United States, and it's measuring volatility. So as equity markets go up, volatility goes down. Last summer, when Europe was having a lot of trouble, the volatility was high. And then in the fall and early this year, the equity markets rallied and volatility went down. Now, equity markets are starting to come off their highs just a little bit, 4, 5, 6, 7, 8, 9, 10%, or it could be more depending on where you are around the world, and volatility has crept higher. But we seem to be in a lot more precarious of a place now than we were last summer, given Europe and things like that and some soft data in the economic calendar. But as you're seeing, volatility overall is less than where it was last summer. So trading ranges are still smaller today than they are or than when they were last summer. So keep that in mind. So that person said, who said average trading ranges are down, volatility is down, you're absolutely right. But keep in mind the risk of anything happening at any time, a very powerful move in these leveraged markets due to some kind of announcement that we weren't prepared for, that we couldn't prepare for, could happen at any time, so you have to trade accordingly. So yes, volatility can go higher, it can go lower. Right now it's where it is as we start to figure out, is there going to be more rounds of quantitative easing and austerity measures and things like that overseas. So I just want you to know where you can quickly go, yahoofinance.com or your broker like TradeStation, wherever it may be, and be able to look at a chart of the VIX. All right. So I'm going to slide back here into the tools, but I'm going to just pause as I slide back and forth to make sure I don't have any new questions coming in. So it looks like the last one was just on the Bill Williams alligator. Yeah, again, that's just not on the agenda tonight. I didn't have any information on that, so we won't be talking about that tonight. But if you're looking for information in that, please let us know at the feedback, and we'll be able to create some data for that or get some information to you. So here we have the volatility indicator information about it. It is under your custom indicator. All right, so I'm just going to flip very quickly so that you can see the information. There was an email that went out that a lot of you may have seen today, and it tells you where to find it. If you can't get this, if you need help, call the customer service desk. But I just copy and paste this email into a Word document. So this is the email that went out today or yesterday that had the link to my webinar in it. So this tells you where it is. You save the file into your hard drive on your computer, into the one-click experts indicator. So again, this should be recorded. You'll be able to see this in a few days, hopefully on the YouTube site for IBFX. But just keep in mind, if you can't get it all right now, that's fine. You can get it with a phone call from them, or you'll be able to review this. But I just wanted you to see that you do have to do a little bit of work to get it if you haven't had it before. Okay? The indicator itself gives you two columns. It gives you an H rate and a D rate. The H rate, all right, is just basically an average of about 24 hourly periods or so. So it's basically giving you the average of 1 day, all right, because it combined, or I'm sorry, 1 hour, but it takes into account the past 24 hourly periods. And then the daily rate, the D rate, is taking into account about 20 days, so it's actually looking at about the average over the past month. It's looking at 20 daily periods over the past month and averaging that out. The other thing you have to remember here is it's smoothed to one standard lot. So not all currency pairs equal $10 for a standard lot. Some are $7, some are $8, some are $15. You can go, if you don't know how to find out what the current currency conversion rate for a pair is, and again, I'm just going to bounce a little bit here so you can see this, and I'll come back. You can do that right on the IBFX page if you go into their tools. So you go into the tools, and then you slide over into the online tools, and then you get to the pip calculator. And here's where you can select your pairs and put it in and find out what a standard lot would be, or a mini lot if you're doing that, how much it would be as far as the conversion rate for 1 pip of movement. So you can go ahead and drop this down and select your pairs and get an idea. But going back to this tool, it smooths it out. So some pairs that may move a lot more and have a big range, it kind of gets smoothed a little bit. So again, you have some pairs that move a little bit more, and they might be at a $7 rate, and then we had to move it to a $10 rate, so it just affects a little bit. So this D rate that you see here isn't going to match up with the exact average trading range for a day for that pair, because it might have had to smooth it depending on if it was a $7 per pip or a $12, $13, $14 per pip. But what it's just giving us an idea of, it's giving us an idea of what's moving. And so someone mentioned that average trading ranges are smaller. Absolutely. I actually met with some people over at Interbank FX the other day, and remember last year, or a year and a half or 2 years ago, the yen pairs? The yen was like the wild, wild, wild west. Forex overall is like the wild west, but the yen is like the wild, wild, wild west. And so moving 300 pips a day or something like that, and a lot of people didn't want to trade it. Well, now the yen has come down because average trading ranges, as that person very smartly put in, that volatility has come down. So now maybe you used to be afraid to trade the yen pairs, and because they were moving too much and you couldn't get a grasp on it. Well, now they've come in line a little bit, and they're kind of like the euro, the pound or the euro against the US dollar were last year with 150 pips of movement. Now that's where the yen pairs are, is they're kind of in that 150 pips of movement in a given day area. So you can see the pound yen used to be a lot bigger. Now it's closer to a smooth average of 150 pips or so, based on a $10 standard lot. So maybe you could say, you know what, it's not as volatile, so the euro and the US dollar might have a small range, and I want to go trade something that's a little bit more volatile. That doesn't mean that you're going to make money in it. That just means you're looking to see if there's some opportunity and trading plans set up that make sense to you and your individual situation. So again, I'm not saying that this volatility tool has anything to do with profit. I'm not saying that it has to do with anything with great trading opportunities. I'm just saying you have to, maybe in these smaller volatility times, be able to open up your watch list a little bit. When I deal with equity traders, and they may be an intermediate trader, meaning they trade for about a month at a time, I tell them maybe to look at 5, 10, 15 stocks on their watch list, kind of similar to forex pairs. You get 5 or 10 or 15 forex currency pairs for the most part to look at. Well, now in slower markets, we might open up that equity trader as an intermediate trader to 30 entities, because it's taking longer to get into trades because less is happening each day. So you as a currency trader might open up and say, I'm going to look at 3 or 4 or 5 other pairs on my watch list and look at them and be aware of them, just because I'm not getting as many opportunities maybe in my 4 or 5 majors. Me personally, I mostly trade the majors, the US dollar cross with the pound and the euro and the Aussie and the New Zealand and the Swiss franc and the Canadian dollar. Okay, 6 pairs. That's my watch list. I just have to realize that I might not trade as much, as frequently as I did 2 years ago when volatility was higher, unless I'm willing to go look at other pairs like the Canadian yen or the the Swiss yen or the euro yen or the pound Aussie, whatever it may be, but it's got to make sense. I live in the United States. I like to sleep at night. I don't like to trade at night. So maybe some of those pairs that are moving when I'm sleeping, doesn't matter if they're moving a lot. I just can't trade them because I don't have the ability to stay up all morning and trade and then stay up all night and trade and not sleep at all. So remember, you guys have to figure out what works for your schedule. Every single one of you listening in tonight is a different person. You're a different trading plan. So just keep that in mind, okay? I'm not saying that there's going to be profit out there. I'm saying we're just looking to see if there's opportunities to build well thought out trading plans. So before I move on to the next slide, I just want to make sure that I haven't come into any questions just yet. So just bear with me. Let's see. So just bear with me. Like I said, we have a lot of people said thank you very, very much. Can you sort the columns? Yes, you can go into the settings function. A great way to go into the settings function, and I'll show you that in just a moment, is to press Control-I and it'll bring up the indicators, and then you can get in the settings function and play around with it. Someone's asking about an error. Again, anybody who's having problems, please call. It's a new tool. Please call customer service. Mine seems to be running fine tonight, but if you're not getting information for some reason, please go ahead and call the customer service desk. What's the relationship between the exotic pairs and the United States? We're going to get into that. That's on the agenda. We're definitely going to get into that. Does the indicator show movement or strength? This is basically what the indicator is doing. Then you have to go in and start to analyze the pair. So if you guys have suggestions and want to see a little bit more, that's the information you want to provide. We want to develop what would be helpful for you. Okay? So very good point. If we're not providing what you're looking for, please let us know. Can the single currency be shown to USD and Euro and CHF? Can the single currency be shown? I'm not sure. You might want to ask that question. I'm not sure if I'm actually understanding what you're meaning by can the single currency be shown. So ask that again. But someone was asking about the settings and things like that. So I'm going to just switch here, and I'm going to bring up the platform right now, and I'm going to bring up the Aussie yen, and that's just the pair that I have the volatility indicator on. And if I press Control-I, so I'm pressing Control-I, and it brings up the indicators that I have on here, and then I can go ahead and click on the volatility indicator, and then yes, I can start to change the inputs and things like that. You can start to change and add or delete the different pairs that you want in there, and change the settings a little bit. So Control-I would be how you get into the settings pretty quickly in there. Okay. All right. Let's get back into the meat here. Oops. Pressing on the wrong button here. Okay. So that's the volatility tool. I think you know how to get it. I think you know how to get your questions answered on it, but that's basically a summation of what the information is it's providing. So again, I showed you that pip calculator. Here's the link to it if you want to write that down, but again, you can find that by going right to the tools section of the IBFX website if you want to find out the currency conversion for the different pairs. So FX exotics in the tool, what does it mean for you? As I said, we just have to be very careful that, when I do webinars, when I work with people, I stress that just because you may hear about something, whether it's tonight, whether you heard something read something in email, you turned on CNBC and you heard something, it doesn't mean it's for you. You still have to do your due diligence. So if we're going to talk about some different pairs today, what does it mean for you? Time of day. Maybe they're busy, those exotic pairs are busy when you're not able to trade them. So what? That's just a part of life. Trading ranges and volatility, make sure you adapt to it. Now, if I'm sitting here in the United States and I'm used to trading the majors, and now I go trade the pound and the yen, I'm now trading the Great British economy versus the Japanese economy, right? And I don't live in either of those countries, and I've got to learn when that pair starts to ebb and flow and breathe, and I've got to know when it's busy. For the most part, we know that most of the volume goes through during the European close in the American Open. But let's face it, if there's something really going on in Australia or New Zealand, right now when the United States equity markets are closing, that could really move the Aussie and the New Zealand against each other, the Aussie or the yen or the Aussie or the pound, because at least one of those countries has its banking center open right now over in Australia, or Europe's going to start, open in 5 or 6 or 7 hours, and that's a busy overnight session. Overnight for me, maybe not overnight for you. You might just be not trading the euro in the U.S. anymore. You might be trading the euro with another quote-unquote exotic because you're up for that time frame when it's busy. So you've got to adapt to the pair. Don't make the pair adapt to you. Does the pair fit your trading personality and time frame? Not every pair is tradable by every person. I think you guys just have to be able to understand that and be okay with that. So exotic pairs, let's go and review some long and short-term opportunities. And again, I like to link things. I told you about intermarket relationships. I like to understand if there's relationships between the equity markets, because some of you may have money invest in the equity markets, or you might be working for a company where you have stock options or a 401k or an IRA or whatever it is, or you may hold lots of gold long-term or silver. Maybe you understand that there's commodity pairs out there like the Canadian related to oil prices or the Australian dollar related to gold prices, and you're able to, like I said, use that word hedge. You're not hedging intra-currency, you're hedging using currency pairs to hedge maybe a long-term investment in something like a commodity like gold or oil or something like that. So I'm always looking at relationships across not only the forex pairs, but other markets as well. So the euro and the pound. This one is, I don't trade this much, but it's uneasy to understand for me without even looking at it, which currency should be stronger. The pound versus the U.S. dollar, I see that on a daily basis. The euro versus the U.S. dollar, I see that on a daily basis. I know that things in Europe are worse in that economy, in that region of the world, than they are in Great Britain. And I know that the euro has lost more value against the United States dollar than the pound has. So I think, based on that, the euro should be going down and weak against the Great British pound. So as we go into our platform and we bounce back and forth, we're going to go into the platform. I could go ahead and bring up the euro and the pound, and again, I'm expecting the euro to be in a downtrend against the pound. All right, and so long-term opportunities, we're on a daily chart here, and I put on my crosshairs. Well, look at this. Since a year ago, the euro has trended down 90 cents down to 80 cents. So about 10 pennies, 1,000 pips. It's moved down. That makes sense to me because I can see two of those pairs separate from each other against the United States, and I understand what's going on in the Europe region. So long term, obviously, the trend is down in the euro. Lately, the trend has been kind of sideways and finding some support, but it found some support here, December, January, February, and then it went lower. Obviously, if things get worse this weekend or in the future in Europe, you would expect the downtrend to continue, but we don't know that until that news comes out and affects it. So the other thing is on the shorter term, so if I just knock this down to a 30-minute chart, all right, so I can see today, all right, so, and we know that we're in GMT time, so right here, around 5 or 6 o'clock, 7 o'clock, 8 o'clock in the morning GMT time, very, very busy. We went from 81.20 all the way down to 80.60. We went about 60 or 70 pips right there in a very short amount of time. These are 30-minute bars in a few hours here. And then it kind of went sideways. It went sideways again, right here, and it's in the afternoon. So if you are trading the euro and the pound at 5 o'clock, 6 o'clock, 7 o'clock, 8 o'clock GMT time, it may not be as busy as it is when the banks and the equity markets are open in Great Britain. So or in the euro region, which are only about a few hours apart or a couple hours apart. So right here again, 8 o'clock, 9 o'clock, 10 o'clock, 11 o'clock, 12 o'clock, okay, that's in middle of the banking day, much busier there. So the short-term trader who's looking to scalp or swing trade probably wants to do it when the European and the Great British banking day is going on. And then again in the afternoon, it starts to flatten out, and then we get busier again as we get into their banking day again. You've got to adapt to the pair. If for some reason you're somewhere around the world and you're sleeping during 7 o'clock, 8 o'clock, 9 o'clock, 10 o'clock, 11 o'clock GMT time, then you may not trade this pair. It may not do any good for you just because it might be a little bit bigger on that volatility scale, all right? So jumping back in, and we can look at another pair. So a lot of my webinars, you guys have been with me in the past, you know that I go into specific trading strategies with moving averages and Fibonacci's. I'm not really doing this here and saying, hey, look at this opportunity. I'm looking at how to use the tool and keep my eyes open and maybe see some other relationships that make sense, but I'm not looking at specific trade setups. That's what I did today in my blog, on the Daily Forex Trading Edge, which hopefully you read that market commentary, and I'll give you that link in a moment when we get towards the end of the session. So jumping it back into the PowerPoint, Aussie yen. That might be brand new for some of you. That might not be tradable for some of you depending on where you are. So maybe you just say, I'm not listening to Brian right now because I can't trade the Aussie yen when it's busy. Aussie weakness, the materials sector, China, who has a great thirst for materials, they backed off and said, we've got problems here domestically. We can't invest as much in materials. So Australia, which their economy, they export lots and lots of materials, lots and lots and lots of material stocks have gone down. If you look at material stocks, there's a sector, XLB, X-ray, XL Lima, B Bravo, XLB. If you look at that ETF, it got hammered over the past few months. All right, it has a lot of big infrastructure type companies, multinational infrastructure companies in it, and it got hammered because these developing countries, or like China, they just didn't need as much. They backed off. So the Australia dollar that exports a lot of these commodities and things like that, maybe it got weaker. So I can show you what it looks like in relationship to the United States dollar. So the Aussie US dollar right here. What has it done as of late? It's gotten hammered as of late. Here we are, February, March, April, May, June. It went from 108.38 down to 96. It lost what? About 12 pennies or so. So if we go back into the Aussie yen, I just forgot which pair I was going to, so that's why I jumped back in here. So if we go back into the Aussie yen, I would expect that the Aussie, which weakened against the US dollar, I think that it's going to be weak as well. We shall see. It depends on what's going on in the yen currency. So if we go onto a daily, here we are. The Aussie against the yen went from 88.30 down to 74.98. So right there, about 12 pennies or so, 14 pennies or so. Again, we know the conversion rate is different between the Aussie yen versus the Aussie and the US dollar. But the point is, up here on the daily, it's one of the bigger ones up here, 134. A higher one would be the euro yen, 154. Pound yen, 163. So it's like the third highest here. So there's a lot of movement. Intraday, there's a lot of volatility. Long term, we get it. We understand what the trend is doing. That could change tomorrow, but we understand what the trend was doing. But again, a lot of you are intraday traders out there. Let's look at the 30-day chart of it. When is it busy? When is it really, really moving? I could move it down to a 15-minute chart here and see. It really got going here around 10 o'clock, 11 o'clock, 12 o'clock, 1 o'clock GMT time, all right? So that's kind of the European close, American open. If you can trade that, great. Maybe you can get some opportunities and develop trading plans in the Aussie yen. If you're sleeping at that time, so be it. But that's when it was busy. It was not busy at 2 o'clock, 3 o'clock, 4 o'clock, 5 o'clock in the morning GMT time. Right now, same thing, 10 o'clock, 11 o'clock, 12 o'clock, 1 o'clock, 2 o'clock GMT time. The volatility is a little bit less. The trading range on the 15-minute bars right now is less than it is kind of at the European close, American open time. So most of the volume, no matter what pair you're looking at, is going through at the European close, American open, but you can start to see some relationships, maybe using the equity markets like XLB in the materials sector, then looking at the Aussie and US dollar. Then you start to look at the Aussie dollar and the Japanese yen, and you can see some similar relationships out there. So you've got to adapt and see if you can trade those pairs. You've got to find out and do a little bit of niche marketing on that pair and really, really learn that pair if it's something new. Okay? So jumping back in here, and now I'll look for some, whoops, I just keep clicking on the wrong slide here. So euro yen, what's going on in the euro? Links. Hopefully there's that downtrend that we know is going on in the euro overall. I was just comparing the euro yen to the pound yen. That's an intermarket relationship there. The euro is weak, so I'm looking at the euro yen. Is the euro going down more to the yen than the pound is going down to the yen? The euro is going down more to the United States dollar. The euro is one of the weakest currencies out there based on what's going on. So I could look at the euro and the yen, and then I could look at the pound and the yen and say, if the pound and the yen is stronger and it's going down, maybe the weaker currency out there, the euro versus the euro will go down more, and I can sell the euro as I see the pound yen trading to the downside, and I can use two currencies together. So let's look quickly at the euro and the yen. Okay, where does the euro and the yen show up here? One of the biggest up there, 154. So we know that it has a good amount of movement. Let me jump into the euro and the yen here. Here's the euro and the yen on a daily chart. Over the past few months, March, April, May, June, definitely going down. We had a little bit of bounce, but the long-term trend is down. All right. Then I can go to a 15-minute chart and see when is it busy. The biggest 15-minute bars are not at 4 o'clock, 5 o'clock, 6 o'clock GMT time. It's at 7, 8, 9 GMT time in the morning when the banks open. And then here we go again, 12, 1 o'clock, 2 o'clock, 3 o'clock in the afternoon, 4 o'clock, 5 o'clock in the afternoon GMT time as the American equity markets are opening up. This is your volatility. It looks very similar. So you're getting a pattern here that obviously living in Europe is a great place to live and trade. Being up early in the United States is a good place to trade. A little bit different depending on what currencies you're looking at when you're overseas. You know, in the Far East, you've kind of got to back yourself up to our markets. But, you know, let's look at two currencies against each other that are in that period. Let's look at the Aussie New Zealand dollar. Okay? Is there more volatility at a different time for two far East, you know, currency pairs? And yeah, here it is, 8 o'clock, 9 o'clock, 10 o'clock GMT time. That's a volatile time right there, all right? So in the evening GMT time when their markets are closed, but in the morning Aussie time, New Zealand time, that's when it was a busier time. So you guys can start to see trading around the clock what best fits you and where you live, and then it's about identifying some relationships and some opportunities and some trading plans for that specific currency, okay? So we were able to jump into the euro pound, the Aussie yen, and we even looked at the Aussie versus the New Zealand dollar. But you guys can now see, open up your watch list and start to look at some of these different exotic pairs in some of these relationships and see if you can develop trading plans that make sense for your individual trading personality. Let me just quickly go ahead and go back, and I'm sure there's going to be some questions coming up. So bear with me. I said we're going to run a little bit longer today. All right, I think I found my starting point. A currency strength indicator that would be very helpful also. Again, get this information at the end today at the webinar when you provide feedback, or call up IBFX or email into the customer support. Get that right to them. So I appreciate your comments there, and I'll pass along this chat transcript to them. A strength indicator, single USD strength should have volatility too, right? Can this be shown too? Again, that's not what I can see right now, but I get what you guys are saying, but that's something for another conversation with probably another development team, not an analyst like me. So someone came in late. This, you can review this, but the ATR, and yes, so it's basically the first column, that H rate is the average of the past 24 hours. So you're getting what it's moved on average, you know, over that daily rate, and then the next one is the trailing of the month. So the D rate would be the past 20 days. So you're getting basically a moving average of the past month or so trading on the D rate. So trading range, and then it would be for an hour, and then it would be leading up to a day for the first column, and then the next one would be the day, but on a monthly average. So it's a daily and then the monthly average. Can you set it up for other time frames? Again, get into it, mess around with it. If you guys have questions, go ahead and call on your specific questions, because I just wanted to show you what it's showing and then how to go and look at different pairs that might be new to you. So that's the thrust of the topic tonight. What type of Fibo tools to use? So I've done Fibonacci's in the past, so I'm not going to get too much into Fibonacci's because that's definitely taking us off topic, but there are some webinars that we've done in the past, I've done in the past on Fibonacci's. What's the link to download the volatility tool? I can I'll show that again in just a moment. What's a good pair for Asia session? I think we just talked about that. We just saw the Aussie and the New Zealand dollar, so I would look at, anything paired with the yen with another currency over there, the Aussie and the yen and the New Zealand and the yen, and go from there. Someone's asking about a future question. What pairs will move in the near future? Obviously, there's a lot of focus on the euro, but if there's more volatility, all pairs should be more volatile. I think they go together. A better way to look at what's going to move in the future is keep an eye on this. Keep an eye on your volatility index. That's really, really important. And then you'll have an understanding, hey, things overall are more volatile. Hey, things are getting less volatile. This, as long as I'm on compliance, which I think I am, this should be downloaded to the YouTube page, which I'm going to provide the link to in just a moment. It should be there in about 72 hours or so, so definitely by early next week as far as the business days go. So getting back in, again, the exotic pairs, they've got to make sense to you and your trading situation. Your opportunity, there were a lot of questions tonight all over the place because we have a huge, huge, huge audience. So again, thank you. I do some consulting. What I do is I develop education for individuals, small businesses, brokerages out there. So what I do is I work with individuals on a one-on-one basis, and I find out what their goals are, what their account size is, what their risk tolerance is, and what, in my opinion, in my 15 years of experience of trading and 5 years of consulting, what is right for that individual and what really they can achieve and what they should be focusing on. A lot of people don't realize that there's more opportunity out there than they actually know because they might have money in other places like equity markets and stock options and things like that, or real estate, and they can use the markets to, like I said, protect other assets and things like that. So I do a no obligation, a free engagement interview where I do it via Skype or on the phone. It's about 30 minutes. I ask some pretty direct questions to you. As a result, I give you a nice summary. If we never talk again, that's great. If you use my blogs, if you use my webinars, if you use all the information out there that I provide, that's fantastic. But I give you about a half hour of my time, 45 minutes of my time, and basically give you a little bit more finite view of what you as an individual should be focusing on. You're the individual, you're the system. Until you understand what you should be focusing on, I think that it can be hard to have some success in the markets and understand when's the right time to trade for me. How frequently should I be trading? How long should I be holding on to my trade? Should I be a long-term trader? Should I be a scalper? Should I be, doing this strategy or this? Should I be focusing on a 10 pip loss, a 20 pip loss, a 100 pip loss? So I help people get grounded with that. So if you have any questions on that, you know how to email me and get a hold of me on your own. Just to review, and I'll get some other questions, but just to review, and I want to provide some people that might want to jump off due to time with some links that are pretty important. We talked about fundamental events. We jumped into volatility, which was our lead into technical analysis. We talked about this new volatility tool that I think will push a lot of you to look at some different pairs out there in these lower volatility markets. But volatility, keep in mind, can perk up at any time. We know that surprises can happen anytime. So trading the right size for your individual account is very, very, very important. Do not over leverage your account. Exotic pairs. What does it mean for you to trade an exotic? Can you actually even trade an exotic based on where you are in your time frame and your personality and your time available to trade and things like that, and focus on the markets? Intermarket and interpair links. Just like I am aware of the Aussie dollar getting weak because commodities were coming off, because China was backing off, I was able then to look and say, I think that I should see some relationship going on with the Aussie against the yen and other pairs and things like that. Long and short-term opportunities. Long-term opportunities may make sense to certain people with certain size accounts. Short-term opportunities, when are the short-term opportunities for that specific pair? It doesn't matter what pair it is. It may not be trading when I'm trying to trade it. So I have to move on to another pair that's moving when I'm actually taking advantage of it. Next webinar that I'm doing is in about 2 weeks. Same thing, fundamental analysis update, technical analysis. The main topic is going to be a quarter 2 review and a quarter 3 hypothesis looking forward. So someone asked, what's going to be busy going forward? Well, this is your chance to get with me over the next 2 weeks from tonight. We will talk about what I think is going to happen going forward, and we'll go through some trading. And it's a great chance for you guys to continue to ask questions. It'll be a little bit more open. It won't be so stuck on the volatility tool that we did tonight. It'll be a little bit more open-ended, so I encourage you guys to ask questions because I'll try to answer them. Where can you find me and the information that I provide and other information that IBFX provides? go to their education page, and that's a good start. Daily Forex Trading Edge, I write there basically every day. I wrote today about a day trade in the pound US dollar using equity markets as a relationship, as an intermarket relationship. One of a trade that I like to look for, and it happened today as we had very volatile markets. The stock market was down and up and down and up, and the currency pairs were down and up, overbought, oversold, overbought, and oversold. So lots of good movement today. I wrote about that at the Daily Forex Trading Edge. My personal blog, same exact information as Daily Forex Trading Edge, so you just need to go to the ibfx.com Daily Forex Trading Edge page. My previous 22 webinars, and then 23 will be this one in a few days, youtube.com, and then you would go and search for Interbank FX videos, and you can find them. I call my webinar series Trading in the New Economy. I think that this is a new economy, very political economy, very government intervention-driven economy. So my series, as you'll find in there, is called Trading in the New Economy. I post every day. I posted a lot today about the movement using the IBFX social page, the IBFX Connect page. You can follow me at The Locals Take. So The Locals Take is my tagline or my handle, and you can follow me, and I post there intermarket a lot of times, just kind of talking about, it's almost like my trade journal. I'm talking out the markets and things like that, and then those thoughts get turned into a longer, more market commentary article at dailyforextradingedge.com. So that's where to find me. Plenty of information that I'm providing and other collaborators and contributors are providing for IBFX. All right. So getting back into the questions, and before I do that, I did want to show, someone asked about downloading it, so I just want to throw up this Word document here. I copied the email. So this is where you can get it, but again, any questions, you guys know you have a great customer service team at IBFX. So I'm going to jump into the questions while I leave this up here. Is this webinar recorded? I think I just answered that. Let's see, I think a lot of the questions were about recordings. I think I just found that. So again, there's a lot of people that are going to use this volatility tool very, very differently. That's the point. You can tweak it to your own needs, but I think that rather having me do that, get on the phone with someone at the customer service side and have them walk you through it as you start to play around with it so that you can tweak it for your needs. I just wanted to give you a broad overview that it's showing that, hey, the yen used to be crazy. I don't want to trade it. Now the yen isn't as crazy because volatility has come down. Hey, volatility has come down so much that I don't like the euro US dollar anymore. It's not moving. I need to move into something that is maybe moving a little bit more like the yen, but I need to find out if I can trade it. I need to go back and I need to do my research on the yen and find out relationships and when's it trading. So that's just my pitch to you is get out there, do some research. These are great markets to be doing research and expanding your trading repertoire, whether it's technical analysis, whether it's combining other markets like equity markets for edges, or going into other pairs that you may not have in the past. So someone's asking, what do I like for a take profit target? Again, it depends. I'm a long-term trader and I'm a short-term trader, so I can't really answer that. Depends on the trade at that specific time. That's where that engagement interview comes in. If people don't know what they should be using for their account size and their risk tolerance and things like that, then that's where I can hopefully help you. Someone's asking if you use Fibonacci levels, ATRs, all of them. I use a lot of different tools, and it just depends on the situation. Sometimes it's a technical pattern, as simple as support and resistance. Great intro to volatility, very clear. Thank you guys for your feedback. At the end of this webinar, there will be some feedback, whether you want to have some feedback on me as a presenter, whether you want additional information. Someone mentioned Williams the alligator as a technical indicator that they'd like reviewed. Please get that information to us when you provide that feedback, because that's how we can become, a broker that really is meeting your needs if you guys talk to us as well. So yes, we know that this will be on YouTube. Excellent. I think I got all of the questions. No, someone was asking about the engagement interview. Totally free, no obligation, just your chance to have me give my unbiased review of you and get you grounded on what, in my opinion, you should be focusing on as far as your individual system. When I say you're the system, meaning you got to know what makes sense for you as an individual before you can start using other indicators and growing your trading repertoire. Yes, you may have to do some upgrades to your IBFX MetaTrader 4 platform to get this. So I just did an upgrade, and it's good to do it every once in a while. So yeah, you might not be able to get that unless you actually do the upgrade. So take advantage of the new upgrade, and then you'll be able to find it in the custom indicators. So download the new MT4 volatility indicator, but you may have to update your platform first. Thank you very, very much for your questions tonight. Great enthusiasm on your part, you guys. I do appreciate it. I look forward to working with you guys I'm just going to go back to the first slide here. So you can just have the information tonight if you want to follow up and reach out to me. But thank you for your enthusiasm. Thank you for participation. I'll be writing on the daily market commentary tomorrow, probably commenting on the Connect page. And then obviously I'll be with you guys in 2 weeks for the Q2 review and the Q3 look ahead. Have a great evening or good morning, depending on where you are, and happy trading.